Hey guys, welcome back to Wall Street Tactical. Today we're looking at the stock called AP. AP stands for AMPCO Pittsburgh Corporation, and together with its subsidiaries, they manufacture and sell specialty metal products and customized equipment to commercial and industrial users worldwide. It operates in two segments: forged and cast engineered products, and air and liquid processing. The forged and cast engineered products segment produces forged hardened steel rolls that are used in cold rolling mills by producers of steel, aluminum, and other metals. They cast rolls for hot and cold strip, medium/heavy section, hot strip finishing, roughing, and plate mills in various iron and steel qualities, and forge engineered products for use in the steel distribution, oil and gas, and aluminum and plastic extrusion industries. The company also offers various other industrial services. The company was incorporated in 1929 and is headquartered in Carnegie, Pennsylvania. The stock trades on the New York Stock Exchange and through brokers such as Webull, SoFi, and TradeZero are where transactions can be executed. Unfortunately, the company has not provided sufficient data to calculate the fair value of the stock. However, the stock is currently selling at the price of $4.98 at the time of this recording. AP was in 4 hedge funds portfolios at the end of the first quarter of 2021, and the all-time high for the statistic of the stock is 9. Calculations at Yahoo Finances showed that AP is not among the 30 most popular stocks among hedge funds. AP has seen a decrease in hedge fund sentiment as of late. If we head on over to StockTwits, we see that the stock share price has decreased by 1.39%. However, the sentiment and the message volume for the stock remain unchanged. If we head on over to Twitter, @Newsfilter said, quote, AP, a look into AMPCO Pittsburgh's debt. So take a look at that graph. Now, if we switch things up, on the other hand, according to writers at Simply Wall Street, quote, AMPCO Pittsburgh has a very low debt to EBITDA ratio of 0.30, so it's strange to see weak interest coverage, with last year's EBIT being only 2.4 times the interest expense. So one way or another, it's clear that debt levels are not trivial. Shareholders should be aware that AMPCO Pittsburgh's EBIT was down 63% last year. If that decline continues, then paying off debt will be harder than selling full grass at a vegan convention. The balance sheet is clearly the area to focus on when you are analyzing debt, but it is AMPCO Pittsburgh's earnings that will influence how the balance sheet holds up in the future. So when considering debt, it's definitely worth looking at the earnings trend, but our final consideration is also important, because the company cannot pay debt with paper profits, it needs cold hard cash. So the logical step is to look at the proportion of that EBIT that is matched by actual free cash flow. During the last 2 years, AMPCO Pittsburgh's guaranteed free cash flow accounting to a very robust 83% of its EBIT, more than we expect. That puts it in a very strong position to pay down debt. The earnings forecasts are a bit outdated. As you can see, it was projected on September 29th, 2021 that the revenue would be US $347.442 million per year, with the earnings being just in the profit with US $1.833 million per year. Unfortunately, there's no future data supplied by the company. Now, if we take a look at the past 1 month, the stock is in the red as it decreased towards the earlier bit of the month and has pretty much been flatlined since. Now, if we take a look at the past 6 months, the stock is once again in the red, pretty much steadily decreasing and flatlining ever since late August 2021. Now, if we take a look at the past year, the stock is in the green, but not by much. Unfortunately, no official information is given about the company's current management team. However, according to Simply Wall Street, their board of directors are considered quite experienced. So does the company have any major well-known name customers? Well, GAMCO Investors Incorporated has the most shares in the subject stock, with ownership of about 14.92%. The second and third place have ownerships of 13.01% and 9.03% respectively. The top 25 shareholders of the company own 72.97% of the company, which means that the ownership is saturated to only a few individuals. Overall, we have no position in any of the companies mentioned. This video is all general in nature, and information is taken from Simply Wall Street. We do not have any sort of recommendation to buy or sell any stock, and we do not take account of your objectives or your financial situation. We aim to bring you long-term focused analysis driven by fundamental data. Well guys, that's it for today's video. We hope you liked the video. Thank you so much for watching until the end. And as always, don't forget to like and subscribe. I'll see you guys next time. Have a great day.